Hello, I'm Angeline Ong and welcome to Beat the Street, the show that gives you all the tradable news and data that you need to know ahead of the Wall Street Open. Coming up, Fed fallout, growth stocks wilt as the Fed keeps the door open to yet another hike. Plus, going the distance, how far are strikers willing to go? US automakers face the threat of lengthy strikes. More details in a moment. And on the corporate front, FedEx in focus after its cost cuts pay off and it gains on the pain of its rivals. Now, good afternoon and a very warm welcome to you on this new edition of Beat the Street. Not long now before Wall Street starts trading, let's have a look at how equity markets are looking on the IG platform. Let's start with the US Tech 100 first. As you can see here, this is a 1 hour chart and we are seeing somewhat of a decline indicator there. Let's have a look at Wall Street as well. Similar picture there. However, it has to be said that many of the moves that we're seeing post-Fed are to do with rate-sensitive stocks, including Apple, Meta, Alphabet and Nvidia. They all fell after the Fed kept the door open to one more hike potentially ahead. 2-year and 10-year Treasury yields, meanwhile, scaled multi-year highs. Just checking on some breaking news now as we speak, just getting them through. Initial jobless claims for the week ending 16th September. We were expecting 225,000. We got 201,000 instead. That was a surprise on the downside. And perhaps this mirrors the continually robust picture being painted on the US economy. Despite the cost of living crisis, despite the headwinds, the higher interest rates, its labor market continues to show signs of resilience. The US dollar, meanwhile, rose after Jerome Powell delivered a firm hawkish stance. Higher for longer was the message. An updated quarterly projections show that the central bank may still lift rates one more time this year to a peak of 5.5 to 5.75% range. Fed foresees half a percentage cut in 2024. As of June, Fed officials had expected to cut rates by a full percentage point next year. Meanwhile, policymakers now see the fight against inflation lasting into 2026 and believe they can succeed without damaging the US economy. Now, as we are on central bank watch, not too long ago, the Bank of England kept rates on hold. The previous 14 times the bank made a decision. Prior to this, it opted to boost the rate starting at the end of 2021. Warren Venkatas has been tracking the pound's reaction after today's result.
Much mixed messaging from Bank of England officials. If we look at the voter split from the previous meeting, we saw 7 members in favor of a rate hike versus 2 in favor of a pause. And I think that will obviously be more divided going into this particular rate announcement. I just wanted to touch on a bit of the pound price action. I do have the daily cable chart on screen. We can see the pound being sold off quite drastically, particularly after that Fed rate pause, which included a very hawkish message of higher for longer. I think we could see a bit of that in the BOE's messaging as well today. Now slipping through that May 2023 swing low around the 1.23 psychological level. And if we do see a rate pause, I think that could definitely break down further towards 122.
Now, ahead of that Bank of England decision and after the Fed, IGTV's Sean Morrison has been watching the S&P 500.
Hawkish commentary from the Federal Reserve has put markets into a bit of a risk-off mode overnight, as represented by the S&P 500. Looking at a chart, we can see that the price has broken out of a short-term range following the meeting. That range considered between 4,425 and 4,535. And the move lower, the close below, it does suggest somewhere between 4,330 and 4,360 could be a short-term downside target. Trend followers will note that that longer-term trend for the S&P is still up, and this does serve as a bit of a shorter-term correction of that longer-term trend. And so we're looking for that short-term weakness to play out and possibly a bullish reversal before looking for long entry again. And that's provided that we do not breaking major lows at 4,330 and start trading below that 200-day simple moving average.
Thanks very much, Sean. And just checking in on the CME's FedWatch tool, traders now betting on the benchmark rate in the US remaining unchanged in November and December. Unchanged in November and December. I repeat, that stood at 71% and 54% respectively. Now to corporate news and strikes, talks and talks, but no deal yet. Detroit's big three automakers and the United Auto Workers still talking, but there's been no detail or no hint of any kind of breakthrough. Less than 48 hours before the union's deadline to make significant progress or escalate a strike with new stoppages. Now, what's interesting about this is that they're increasing the mood music, increasing mood music from the automakers, that they are not going to give in to the demands by the UAW. GM's president said the fundamental reality is that the UAW's demands can be described in one word: untenable. As the past has clearly shown, nobody wins in a strike. We have delivered a record offer. That is a fact. This, according to GM's president, Mark Roos. This is going to be quite fascinating and perhaps, if history repeats itself, down to the wire talks. And we may see that on Friday either we get a deal through or we have stalemate and the strikes continue. Just checking in on General Motors shares for you. This is the hourly chart, and you can see that it has been ticking lower so far this session and also the prior session. Checking in on also on Ford, because GM, Ford, Stellantis all affected by this. Ford, this is the hourly chart, has sort of regained some of its composure, but it is also ticking lower on an hourly chart here since those strikes began. Now, it's not just the auto sector, but the LNG side of things that is also being affected by strikes. This time it's Chevron, Australia's industrial arbitrator, is pushing Chevron and unions to resolve their long-running dispute over pay and conditions at two liquefied natural gas projects, recommending that parties accept its proposal. Not much in the way of details as to what the proposal is, but Chevron and unions have until Friday morning to decide. Either way, the tribunal has the power to halt the strikes, which escalated to two 24-hour work stoppages over the weekend. One area that we're following closely for you, the IPO market, is in an IPO revival or fizzle. We have plenty of big names coming to market recently, prompting hopes that the global IPO market is indeed coming back to life after a 2-year hiatus. But a wobble by Instacart and Klaviyo now raising doubts about this. Just checking in on ARM's shares here. This is the ADR, and on an hourly basis, I can get a reading there. It has come off, and I can tell you that marketing automation firm Klaviyo shares also closed well below their first day high on Wednesday. Meanwhile, the high-profile listings have put the investor focus back on the IPO market, as I mentioned earlier, after a really dry spell. But there are now concerns that actually it's still a tough time out there for offerings, given interest rates remain higher and now perhaps higher for longer. And we've seen recent wobbles on the broader US stock market as well. And just before we go, let's just have a quick look at the markets for you, because FedEx is another big one that we are looking out for, because FedEx came out with numbers It's not an all-session stock on the IG platform, but I can tell you that its first quarter earnings did surprise investors in that it had a huge profit beat. Earnings coming in at $4.55 per share, a jump of 32% year on year, smashing the $3.70 the street was expecting. This all coming after a cost-cutting program. It also poached customers from rivals UPS and Yellow. Revenue coming in broadly in line with expectations. FedEx, as I mentioned earlier, not an all-session stock on the IG platform, just showing this to you as well as a wider daily chart view, because we have seen the cost-cutting help FedEx gain ground against its rivals. It's also been quite quick at doing this to offset waning demand. The shares could potentially jump at the open this afternoon. Now, before FedEx, as I mentioned earlier, let's have a last look at the markets, because we could potentially see quite a lot of volatility in the open today as the growth-related stocks, the Nvidias, the Metas, and also the growth stocks like Microsoft, Apple, moving after the Fed. There you go, the US Tech 100 after the Fed left the door open to potentially one more rate hike. And that's it for this edition of Beat the Street, the show that follows all the trading action, helping you position yourself ahead of the opening bell. For more trading insight, follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.